COVID-19 is still a threat to the global economy. Most of the global economic activities were halted by this crisis, and the 2020, the year that was everyone was crying about what was happening on the globe, the curve was not showing the same on the stock exchange. We are going to get the explanations more about what happened to the stock exchange in 2020 and 2021, which is going to its end today with Celestin Rwabukumba, who is going to be my guest. This is Ruziga Emmanuel Masantula, and this is the 360 Show. Mr. Celestin Rwabukumba,
sure.
Welcome to the studio.
Thank you.
Yes, we are seeing the different move of the indexes along the curve when it comes to what happened in 2020 and 2021 on other sectors of the economy. What happened? How can you explain this, that most of the numbers were increasing on the stock exchange, be it in Rwanda or elsewhere in the world, yet every economic sector was declining?
Well, I think maybe what we must say, I could start from what was happening here. I think 2020, it was the year of COVID-19. What has happened here, we've seen all our numbers actually has been one of the best years the market has had so far. So the money raised, for example, has gone beyond 300 billion for the first time in 1 year. That is with government bonds, for example, the debt market. Also on the equity side, we listed 2 companies, and we had also a rights issue in 1 year, in a year like that. So it was a cross-listing from South Africa, the company in the healthcare industry, which is called RF Buffalo. And Simero listed for the first time also. It's also a big company in Rwanda. Like they say, BBCs, now we have our C on the stock exchange. That is banks, breweries, and cement. And normally that's how they follow each other on stock markets everywhere in the world. But for us, those 2 listings took place at the same time. And we had also a rights issue from a bank. That's bank, I&M Bank, which was trying to raise money to comply with central bank requirements. So that is on the product side. So now on the government side, like the debt instruments, they also kept coming on the market. Those actually the total amount raised through the capital markets actually was around 319 billion Rwanda francs. That was the first time something like that happens like that. The same went on for the secondary market trading. The volumes were quite good. And the other metrics also, we launched a few products or other projects on the market, which are now showing us some positive results. We hope to have more products coming out of that. So the same spillover effects came into the 2021, although I wouldn't say it's the same exactly as 2020. Because 2021 things started, we had a few lockdowns, and also the borrowing and the market usage, and the people who have savings, normally some of the savings start dwindling a bit. So that it would explain the slight difference between last year and today, although even today the year is still performing quite well. So we've had our first SME listing on a corporate bond for the first time. So the activities continued. So now in periods like this in general, what happens? Of course, I will not go without saying that the indices went down slightly on the equities markets, because periods like this, people are very reluctant to buy or trade in shares as much. But volumes, actually, what they mean sometimes in trading, it doesn't necessarily mean a good thing for everyone, because some people are selling, losing because they need money. But most of the time, when there are periods like this of hardships, everyone is trying to restructure their businesses. So if you want to restructure your business, it starts from the financials. So people are restructuring their debts, or the banks are refinancing some of the projects. So we kept seeing that happening in our economy, and the economy kept remaining a bit resilient because of the general management also, I think, of the COVID situation in Rwanda. The management has helped a great deal in what was happening in the general economy, but also some of the spillovers went into the market, and the subscription subscription levels we kept seeing in the past 2 years for all those instruments that came to the market, especially particularly the debt instruments, people are running to safety. You understand? So when you have debt instruments and those debt instruments are coming from government, people trust it. And now the public awareness is there. People are starting really to join the capital markets, buying especially mostly the debt instruments. Those are the government bonds or any other bonds that would come there. So I think that would explain what has happened in the market. Otherwise, it's not rocket science. Yeah.
So with that flattening curve of the effects of the COVID-19 and what was seen to be displayed on the indexes, on the capital market, one would conclude that the stock exchange is not the economy, and sometimes we tend to relate the stock exchange and the economy. What is the relationship between the stock exchange and the economy in general?
Well, I think a stock market normally is supposed to be the mirror of what is happening in the economy. Matter of fact, actually, if you go back to what I said just when I was concluding the first question you asked me, I was talking about what happens is not necessarily a good thing for everyone, because some people are selling losing because they are losing money. Others are selling because they need the money mainly. So the mirror of the economy means that the underlying instruments which are listed on the stock market normally are reflecting the general economy. In our particular economy, we have the banks, we have the brewery, the main brewery. So the biggest taxpayers in Rwanda, you see, and the biggest profit-making companies are already listed on our market. So if you are talking about the telecom company, that is MTN, you are talking about the Brarirwa, you are talking about all the big banks, they are there. So basically, actually, I could say it's a reflection. Actually, matter of fact, it's the opposite of what you are saying. It's already showing us some kind of reflection of what is happening in the economy. If you look at the numbers of all the banks, they have made money. You understand? So, and our economy is comprised of big companies, which are dominating most of the volumes and profitability in the economy. Although most businesses are small and medium enterprises. So that's why maybe you can find a mix or a conflicting view of what is happening in the stock market and what is happening on the ground. But in general, if I look at the trends, it's the pricing and the volumes which are trading. So, but another indicator is how much money is being raised through the market. If you could really go back again, you would see or realize that in the market, what was raised last year, for example, in the capital markets, whether it's from government raising money using the government bonds, and the equities that have come to the market, you would realize that there was also other funding mechanisms to the economy coming from outside, the donor community, maybe the IMF giving relief to the payment of some of the debts coming to the government to fight COVID, to try to manage the COVID situation. All that has come in a period of hardship, of course. But if you look at all this funding relief that has come in, and all the other side of the coin, which was raised in the market, you will find it's almost the same, or actually the market has even raised more than what was raised from those other sources. So the domestic market actually has shown some resilience of some sort. Yeah.
With the resilience, yes, but I think the stock exchange, with the reasons that were there to set it, is to help the economy, to help the government, to help the corporate to get the capital. But today, the economies in general, globally, have been affected by the COVID-19. So what are you doing as the Rwanda Stock Exchange today to make sure that you contribute to the recovery of the economies?
Well, the first thing is we are doing more and more public awareness. Actually, matter of fact, you've been seeing some of the actions we are taking to start, to keep preaching the gospel of savings through the markets. We are trying to increase more awareness about collective investment schemes, for example. We have now included the SME side, that's the supply side of the market. We have now introduced something we call the Capital Market Investment Clinic, which is this project that we have been working on for this year, last year actually, and throughout this year, which is trying to help or handhold the SMEs and other corporates that wish to do that, so to try to raise money through the market. But what we are doing, we are trying to support them by hand-holding them to get them to be investor ready. So that's one. So that's the awareness, but also we are onboarding more and more SMEs to come into the market. But we're also trying to automate the market so that we democratize the process of accessing the markets by also having some of the people access the market using their mobile phones. So there are a few projects we are working and running through so that we are able to help our general public to access the market, whether it's on the supply side or the demand side.
Yes, so Rwanda is trying to establish itself as an ICT-based economy, and today we are seeing the resilience of your market during the COVID-19. I don't know if it's based on how you leveraged on the technology, but I just want to know how you are trying to cope up with the world today that is basing rightly on the technology.
Well, I mean, we are trying to benchmark with everyone. As I'm talking to you today, this morning, we were trying to link to the other markets using our capital market infrastructure for the region. So we are automating our market, and we are also looking into introducing, digital technology. Using the telecommunication companies to be able, for the people to be able to access the market. So that is the automation process, but also digitalization of everything in process and direct market access is something that will be accessed by next year. However, the full automation of the trading, actually we are planning to test actually the first transaction across borders next week. So we've been working very hard, and the official launch is going to be before end of this year of our trading platforms. But thereafter, we will also be introducing the mobile technology for people to be able to use those applications and to access the market. So I think we have our average on what other people have done, and we are trying to benchmark with the rest of the world. But of course, we're using the best standards internationally.
Mr. Celeste, sometimes we think of capital market or stock exchange as a business for rich people. I think in Rwanda, you are doing a lot of campaign to make sure that you get the corporate governance, transparency, and everything on the supply side. But on the demand side, we just want to know how you are trying to make sure that at least the population understand what you are doing day to day, so because they are the client of that market. Yes.
Well, what we are doing is more and more public awareness using all platforms possible. The first one is TV. I'm talking to you right now. The second one is radio, talk shows, road shows, social media, and many, many more, and one-on-one interactions with the general public. But we have gone through, we have done the university challenge, for example, for the schools, where we get students to compete, to get to know more about capital markets and awareness and savings. But also we are working with different partners from the government side, the central bank, and the other institutions, even some development partners. We are working with them so that we give more skills to the general public, but also the professionals who are conveying the message. So we can't do it alone. But we also are trying to leverage on the general grassroots movements across the whole country. Working with the local government institutions, the private sector federation, where they are. If you recall, when we were starting the market, I think in 2008, the capital market launch, we went across the whole country. Physically, every single Murenje, we went there. But we are intending to do the same again. But now, luckily, this era, this time, I think we are using more technology. We can leverage also, we are going to be also leveraging on technology, events which are online, where you don't even have to come necessarily to the exchange or to a hotel room to talk to people. So we are trying to do all that and using technology also to make sure that we access the general public. But most importantly, I think you know, the people have to have something to save. So that means, you know, the general public must work. You know, if there is work, you must do it, and you must do it excellently. And you get to be told, and you listen carefully that saving is good for you. You know, so when you save together and you invest collectively, you can reach big things put together. So I think that's the message you are trying to convey to everyone out there who's listening to us, or people we are going to talk to. That is on the demand side. The demand side is on the side of investors, you know, savers out there. So we keep conveying the same message, because that message doesn't change actually. What can change mostly is the means maybe we use, or more resources we can put into. I think we are getting more and more resources and more partners and stakeholders who are trying to help us, especially, this is a big lesson for us. I think post-COVID, people are looking inwards, because wherever you are going to knock, they have their own problems. So we cannot be waiting for the people from outside. We have to rely on our own internal resources, and then we pull them together. And as we know, the capital markets, you know, they manage actually resources better most of the time. So you are taking the resources to the most productive sectors of the economy. You reward them. You know, that's what the financial markets do for you. But on the other side, if the productive sectors, actually no, those sectors which are not performing well, they get punished when it happens like that. So I think those are some of the messages we try to take out there. But now we are going to intensify that public awareness and skills development with our intermediaries and all the people who are dealing with the general public.
So this program has two parts. One was on the macro side, and another one, the viewers, our audience, would like to know the incarnation of the stock business, stock exchange market. And before we come to the explanations on the history of Rwanda Stock Exchange and how it has been working and all the infrastructures that have already been put there, I think we have to start with a short video which is going to explain where did it start while today we're having a stock exchange on the global area, but we have to know where it started from, and this is the incarnation of it. In the 1600s, the Dutch East India Company employed hundreds of ships to trade gold, porcelain, spices, and silks around the globe. But running this massive operation wasn't cheap. In order to fund their expensive voyages, the company turned to private citizens, individuals who could invest money to support the trip in exchange for a share of the ship's profit. This practice allowed the company to afford even grander voyages, increasing profits for both themselves and their savvy investors. Selling these shares in the coffee houses and shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor to company's initial public offering or IPO. This launches the company into the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. The investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they will sell their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down, the stock prices falls, and with it, the company's market value. This can leave investors with big losses unless the company starts to look profitable again. This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces, such as the fluctuating price of minerals, changes in production, technology, and the shift costs of labor. Investors may be worried about changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interest. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors and in turn losing actual value. Human confidence in the market has the power to trigger everything from economic booms to financial crises, and this difficult to track variable is why most professionals promote reliable long-term investing over trying to make a quick cash. However, experts are constantly building tools in efforts to increase their chances of success in this highly unpredictable system. But the stock market is not just for the rich and powerful. With the dawn of the internet, every day investors can do the decision, can buy stocks in many of the exact same ways a larger investor would and sometimes will. And as more people educate themselves about this complex system, they too can trade stocks, support the businesses they believe in, pursue their financial goals. Now, that is how we can explain it in a global way, how this was introduced on the global way. But in Rwanda, in 2011, the Rwanda Stock Exchange started. Though we can start thinking about it with the legal way in 2006. Celestine Wabukumba here is going to help us to distinguish between the capital market or the stock market and the commodity market, so that Rwandans in their context can understand well. Celestine.
Okay, thank you. I think operationally we could say that within the capital market industry, also commodities markets can emerge, because in a commodities market, when you see on a New York Stock Exchange or London or Metals Exchange and everywhere in the world, you see things they call futures. You see that in the markets, they are basing their pricing on a future pricing of commodities, the underlying commodities, but those are derivative products. But that's a complicated language maybe for most of our viewers probably. But in a nutshell, the capital market in Rwanda is comprised of the whole industry. You have the Capital Market Authority, which is the regulator. regulating the entire industry. It regulates the commodities exchange also under its docket and other services provided by service providers within this industry. But it also regulates the stock exchange. So Rwanda Stock Exchange itself, maybe what I would say, is the front end in the business of the capital market, basically, where shares and bonds and other products are being traded by different intermediaries. We are talking about stock brokers and other advisors who advise companies to come to the market. So in the stock market or the stock exchange, what we do normally is to list companies, Bralirwa, Bank of Kigali, Simerwa, or government bonds or corporate bonds which come our way from different institutions which want to raise money and have their securities traded on the stock market, right? So when you are talking about the stock market, you are talking a stock. You know, it's a term which can mean either bonds or shares. People are buying or selling with each other, but those shares or bonds belong to companies or governments or other institutions, right? So that's what the stock market does. So raising funding for the economy and trading for, people are making money when they are trading the shares they bought before and the prices go up and so on and so forth. That's what you see most of the time, where you see those stock brokers coming into the market and they are trading all the time, you know, on behalf of their investors. Yeah. So they are the ones who are representing the investing community. So now on the other side, we have commodities markets. The commodities exchange actually is also another trading platform, but you know, unlike the stock market or the stock exchange, which trades securities as the shares and bonds and the other instruments that may come, in the commodities market, what is traded there is the commodities. You know, normal food. You can have commodities exchanges trading, like the one we have in Rwanda, EAX, that's our East Africa Commodities Exchange. It's trading generally in consumables, you know, the farm produce. They are doing maize. In future, they could be doing also things like soybeans. Even today, they have different grades, okay, of beans. You know, most of us, we know just beans when you have them on your plate eating. But professionals know different grades of beans and they cost differently. It's like you are buying quality number 1, quality number 2, number 3, and the prices differ. So typical commodities exchanges we have, let's say maybe in East Africa here, is commodities like exchanges that are trading in tea and coffee. Those are very, very popular commodities that are exchanged there. And we can also have in those commodities exchanges, you could also even include metals. You can include extractive products like gold and so on and so forth, but also the derivative products out of that. That's where you see the futures in those markets complicated in the advanced world, New York, London, and the other markets where you see those different derivative products traded in those markets. But otherwise, the main difference between a commodities exchange and a stock exchange, one is selling, is trading in shares of companies or instruments of companies. The other is trading purely in commodities that are normally consumed by people in general, but in big bulk normally. But also, but all of them are treated professionally. So you have someone there representing you when you want to open an account to trade in commodities exchange, because you can't go there and bring your bucket and I want beans. No, you have to have a broker or an intermediary dealing in that commodities exchange who is a member of the commodities exchange. By the same token, in the stock exchange, you need to also pass by a professional institution as a stockbroker or a bank of your choice, which is licensed to do that job, particularly to make sure that they accompany you as you are going to buy those investment products, because there's a bunch of things you have to fill. They have to know who you are, what we call KYC, know your client. There are forms you have to fill, and there's procedures we have to follow to avoid issues of money laundering, for example. That's something we are very careful about. Nowadays, it's very, very crucial for countries, especially like Rwanda. We are aspiring now to be an international financial center. It's very, very important. Today, a bank may just refuse a client bringing $10 million to open a bank account in Bank of Kigali. If that individual is someone you doubt about, you can't open an account for them. The same way we do the same in the stock market. It's very rigorous internationally, and in Rwanda, because we follow the law and the best standards in the world, we are doing the same. So I think that's where the aspect of bringing in intermediaries in all this market, professionalizing what we do, is very important and crucial for both sides, the government, which is trying to make sure that things are orderly, but also for the general public, which needs to be protected. I don't expect, for example, an individual walking in the street knowing that they should be buying government bonds or they should be buying shares. How and why? You know, maybe these people are not suitable for those investments. You see what I mean? Maybe this person should not be buying shares, they should be buying bonds. So that's why where the aspect of advisory comes in, so that they can be getting proper advice. Because remember, this is money people have earned very, very, sweating very much. So you need to preserve every single bit of it and make it grow. Markets normally are supposed to grow your wealth and are supposed to make sure that when you go to retirement, you will not have to rely on your children.
Now, with the legal basis, with the legal aspect as you brought in, we would like you to help us to differentiate between what you do as Rwanda Stock Exchange with the regulator, Capital Market Authority, with what we hear outside. Can we have an institution which is selling shares outside without passing through Rwanda Stock Exchange or Capital Market Authority here in Rwanda?
Normally, every business activity in any particular country must be regulated. They are regulated. In Rwanda, what we are talking about is financial services and instruments which are being sold and bought. Remember, you are spending people's money, are not spending, actually, these actual savers out there, they have earned their money, they want to invest it by selling, by buying different instruments on the market, right? So now, having said that, in Rwanda, there are only two regulators in financial services. There is the central bank, which is regulating banks and non-bank financial institutions. That includes telcos nowadays. They're also handling some part of money using Momo and all that. There's some aspect of that which is managed, regulated by the central bank. We have the, what do you call it, the insurance, contractual savings, which is the insurance and the pension. All those are regulated by the central bank. The only financial services activities which are not regulated by a central bank is the capital market activities. That includes stockbrokers, including the stock exchange. As a stock exchange, actually, a stock market typically actually best standards in practice in the world, they are also regulators in a way. Stock markets, stock exchanges, normally they are self-regulated organizations. That means we create our own rules, but those are business rules, not in the Gazette of Government, you know, which is Gazette in the official Gazette. Those are business rules, but which have to also, at the end of the day, have to be given green light by the regulator, which is the Capital Market Authority here in Rwanda. So in other countries, many words, I mean, the jargon they like to use, they use the term Securities Exchange Commissions. That's what you have in America, in countries like Ghana and other countries, they call them SEC, Securities Exchange Commissions. But in some other markets, especially in East Africa, we call them Capital Market Authorities. So those are the apex organization standing in for the general public, standing in for the government to make sure that the markets are orderly and transparent. And if you want to give a license, a stock exchange can't give a license because it's not a government institution. You know, it's not put in place by law. It's an institution which is put in place by its own constitution arrangements. You know, the company has to register, but of course what we do is of public utility. So much as we say it's very private institution or something by way of constitution, but what the stock exchange does is public utility. So it must follow certain rules and the regulations, and they are vetted by the regulator, the main regulator of the market. So the regulator is the one that sets the standards of everything, and it's the one which takes care primarily of the orderliness of markets and protection of investors. Of course, at the the stock exchange level, we also do the same because we are trying to safeguard the integrity of that market. If there is any single fraud, for example, on the stock market and it gets known by the public, because you know what we sell is information most of the time, or people who need it to use it to buy shares or bonds or to issue their own instruments in the market to raise funding. So the integrity and protection of all sides is very important. It starts at the exchange level, but when it gets to the regulator, now it's government. Government issues licenses, government issues directives, which are official and gazetted in official gazette of the country.
Yeah, so the good thing is that you are the CEO of Rwanda Stock Exchange, not the government, so I would go further on that area. But before we go to how the trust influences the decision making when it comes to the investors, on that point we are coming from talking about, if we have some companies, private companies outside here, telling people that they are selling their shares. You come, you buy chicken. We keep them for you. You have shares of this company, or maybe you come, you buy shares of this company. We are running another business outside, maybe or inside, but here in this territory, would you say it's not allowed if it's not passing through the BNR and the capital market?
Well, I think selling shares, those are public securities. Yeah, as long as you are, for example, sitting with your friends, high school classmates, you decide to create a company, and you say, let's put money together and buy shares now and start business. That is a private business. So you get together because you have so many private companies which are not listed. So those are companies which are like that. Now, in that area or that space is not really regulated. So now, the moment you get into that space of saying, I'm going knocking door to door, you are advertising, that is already illegal. Actually, that is punishable by law. There is financial sanctions around it. There is also imprisonment around it because it's completely illegal. You can't be selling securities, claiming I'm selling shares to someone, yet you are not a licensed member.
This is what I'm talking about outside. It's
yes,
here.
It's not really allowed because you must be licensed, okay, by the authorities. The authority here in Rwanda we know of licensing people is the Capital Market Authority or maybe the central bank for other financial services activities. If someone is coming selling you pension products and they are not coming from RSSB or they are not coming from maybe an insurance company which is regulated by a central bank, you know you are being you are not safe. And I actually should be reporting to the nearest authorities, definitely. Yeah.
But we also have some customers of one financial institution, which is not going to be mentioned here in this program, who are called the shareholders, though they don't get dividends, but it's not listed on the Rwanda Stock Exchange. How do we define that?
Well, you know, a shareholder can be a shareholder as long as you have paid your money to buy shares in a company. So those things can be done by private placement. That's the issue I was telling you earlier. If you have your own cooperative, there is a way cooperatives, for example, are registered. So you have shares in your cooperative. The law governing cooperative movements normally, require everyone to be equal. One voice, one share, right? Even contribution is the same when you have a cooperative, right? And they have their own governance, their own regulator. So that's not financial instruments as such. You are just getting into the cooperative movement on its own. So now there are things they call vimina. Those things, most of them are illegal, by the way, because they are not registered. Most of them.
They are informal.
They are very informal. They are very informal. And if you lose your money, no one will. You will not claim anywhere. You cannot go to anyone. You can't tell RDB you have registered. You can't go to RGB. That's the Rwanda Governance Board. You can't go to the Capital Market Authority or Central Bank. Say, oh, by the way, we have created a kimina of giving each other money. You're lending each other money. By the way, did you know that any lending activity in Rwanda must be regulated by a central bank? Any lending activity. You are either a bank or microfinance. So now someone starting lending that Rambere, by the way, almost. But through the Bimina, they are also supposed to be regulated. But of course, this whole thing is about, they are not created just to deceive, I don't think. But there are so many of those which have come as pyramid schemes. And those are very dangerous. The pyramid schemes, or what we call Ponzi schemes also in these industries, as those schemes where people just create something and they tell you to bring more people. The more people you bring in, the more money you're going to make. Most of the time they are talking about exorbitant profitability. And I don't know any of them which has been ever successful. They are successful for the people who go there first. But those who come after, they cry. It happens all the time.
Let's go back to the Rwanda Stock Exchange and how the trust influences the decision making.
Well, I would say that trust and confidence is what make people vote for their leaders. Yeah? Trust and confidence is what makes you marry your wife, right? So trust and confidence in business comes with how you conduct your business. So now the stock market, when they are created for three things. The stock exchange here or the capital market is no different. Our stock exchange was created to help the economy, to assist rather the economy or in the development of the country by way of raising long-term financing for businesses and government in general, okay, without any exception. That's on the supply side. These productive sectors of the economy which are looking for the money, they can use the platform of the stock exchange or the stock market to raise those funds from different investors across the globe. So, on the other hand, it was created to get that platform to use it for savers out there. Those people who have made their money in their own farm, instead of buying more seeds, they take some small money, they put that money aside to buy those instruments which are sold and bought in the stock market. You understand? So that is the supply side for the companies or the institutions or projects. And the other side is the demand side for those people who have money, they put aside to be able to invest it for their own future. Okay, that's number two. Number three, which I always value it as the most important aspect of that, is that trust and confidence I was talking about. Good corporate governance. Good corporate governance comes with accountability. It comes with good corporate governance and transparency. You understand? So at the moment you start going in the public, you say what I'm saying, you are saying it with confidence, you are not going to be lying to the public because everyone will know tomorrow. So now the trust that is built through those structures, they are internationally recognized. We have IOSCO principles, which are those principles that govern securities markets across the globe, the same way we talk about ISO, for the general standards internationally. When you talk about international financial standards, IFRS will follow in the stock market. The same way you see a balance sheet of Bank of Kigali in Rwanda, it's the same way you are going to read it in Singapore, because that's how they are supposed to be done. So the stock markets follow those rules, and that's what brings the confidence and the transparency that comes with it, and the dissemination of that information to the public makes it very transparent and clear to everyone who wants to access it, to say, you know what, this thing is good. But if I come to you and I'm Rabukumba and I say I have my tomato company, would you buy shares in that company? Do you know me? You don't.
I don't know you.
But if I say I have my license, I've gotten a prospectus approved fully by the Capital Market Authority. If I'm in a banking sector, I want to create a brand new bank, no one knows it, but Central Bank has said, I've given you a license. Capital Market Authority has given you the approval to raise money from the public. You remember there is the word public, means it's transparent, it's out there. Everyone is seeing it, everyone is looking at it, and there is standards of checks and balances, and there's reporting mechanisms for good and bad. So if you are in the stock market, those companies, they must report everything, what they're using the money for, how they are profitable, their projections, and how they are doing. Even if you have a bad lawsuit against you and you get charged 5 billion, you announce it within 24 hours. We must have a board resolution at the stock exchange, and we disseminate it immediately to the general public. So that no one, even insiders, cannot get that information and use it for themselves before the general public gets to know. So that's why we require people to use those structures in those procedures so that that confidence created remains. And there is a word we like to use in our business, in our industry. My word is my bond. Meaning that what I'm telling you is already a contract. We don't even have to sign that contract like that. If I say, Masantura, a stockbroker from Nairobi tells you, can I buy you shares, 1,000 shares? Yes, I said, yeah, go ahead and buy. Do you have them? You agree on the phone, and you can transact immediately. That transaction is already final. So it goes to settlement without having any other intervention. Luckily nowadays, we don't carry certificates in a bus anymore. Now everything is electronic. So it's on a click of a mouse, the transaction has taken place, money goes into someone's account, and the shares go into your name. So that kind of structure, that's what builds the entire confidence, and it influences investors to come into that structure. Otherwise, if you are going by your word alone as a business person, or even by the way, as a government, there are some governments which have failed, on their obligations. If a government is not serious, people will not buy their bonds. You have seen governments going to the international markets to do what we call Euro bonds. If you're not credible enough, no one will buy your bonds. Or if they buy it, they will buy them maybe as junk bonds, and then it will be expensive for you to pay back. But there are always those structures which are internationally recognized, which bring in the confidence from the general investing public. That is why you see someone buying shares in China without having set their feet there. Or you see some investor from Tokyo buying shares of Bralirwa.
I have a client who has spent more than 10 years in London, and I just connected him to one of the broker here, and he has just bought shares of a certain company here for more than 10 million.
You see, so
without
you see,
coming here.
They don't have to come because those are structures which are internationally recognized. So, and that's very important. So now, actually, our call all the time, we are talking about public awareness, whether it's on the supply side, that is companies out there in the private sector, or whether it's on the demand side for those investors, or people don't call themselves investors, because they think we have small money. No. An investor is someone who can afford 2,000 francs today in Rwanda. You can buy units of Aranite. Iterambere fund, you can start as little as 2,000 francs. You buy units in Unit Trust of Rwanda. You understand? And that Unit Trust of Rwanda is holding a portfolio of instruments which are rewarding every 6 months or even every other day, because they come into the market because it's a managed fund. Aguka fund is doing the same. There are so many other funds which are going to be created. I can feel it. We can see some people are trying to create different funds to invest in the market. So that situation tells you already that you can be an investor without being rich in a sense, but you can become rich over time.
Constructing on that trust and confidence on what business, what the companies are doing, is it the reason why we're still having few companies listed on the stock exchange? Is it the reason why you established the investment clinic?
Well, I think the markets, when you are still at 10 years almost, our market, we are talking about roughly 10 years this year. We are concluding 10 years of operations as a stock exchange, for example, officially. That is the first company, typical Rwandan company, has listed their shares. That's when we launched the stock exchange back in 2011. So the structures normally trust big companies. Like we were saying, public awareness, someone taking their money and coming to buy things which are intangible. Shares, you can't see it. You understand? You cannot see a share. But you are told there is a share. It's represented by some paper. Nowadays, it's some electronic form. But people have now started trusting their phones to pass on money with each other. Before, it was unheard of, right? So that's technology. But the principles are the same. So once you start the market, you start with big companies. And it is a long process to convince someone that is the supply side. Always we are talking about the supply side and the demand side. Infrastructure, soft infrastructure, we have put a very robust soft infrastructure. That is the legal frameworks, the platforms to do what we need to do at the highest international standards possible. Because we came without any luggage, back from the past, we just leveraged and we took advantage of what was existing and we customized to our own market needs, right? So, but that one, if you build the road, you need the cars to come in. Now the cars in the capital market, after the legal framework and the soft infrastructure, we need the products, that is the companies, to convince a ABC company, a private sector company, completely private sector, to open up their shareholding, okay? And you know how it is, even in our own culture, we don't like to say the truth all the time. You understand? About small things. Now, later on, the bottom line.
Rwandan culture?
Well, I think it's an African thing. People don't like to be known what they are doing sometimes. So now convincing someone to sell a part of his company, immediately they say, oh my God, I'm losing my control. You understand? But they forget that Bill Gates only less than 4% in Microsoft and he's still one of the richest people in the world.
Less than 3 actually. No?
You understand? It's less than 3 now. You understand? But he's still one of the biggest richest people in the world. So now that's one of the reasons that companies were reluctant in the beginning, mainly, not trusting the structures, not trusting opening up their shareholding. But as time comes, it comes slowly. So, but if you want to also inspire the confidence, the requirements are not easy. When they ask you to have good corporate governance, they say, by the way, one of the rules they tell you, if you want to come to the market, forget about family. If family is qualified, yes, you can give them a job. But you have to have also independent directors in your company. You have to show your accounts. The books of accounts have to be one you show to Rwanda Revenue Authority. And you have another one, the same one is the one you have to go to the bank with, or the Capital Markets Authority. Are you ready for that? Most people are not in the business community. Most people are doubting, not. Trust me.
They're not.
Trust me, most people are not ready for that. So now, that's why you see they talk about BBCs in stock markets when they are coming up. Okay? BBCs means banks, breweries, and cement companies. Most of those companies, they normally come from a structure of good corporate governance. You have no choice. You are a public utility. You understand? Most likely you are governed, you are regulated by a central bank somewhere, and you can't escape the central bank and start, faking numbers, for example, or mishandling your governance, you see? Because you are handling public money. So, so that's why you start with those big companies. There is a reason to that, because the requirements are very tough. Then you also have the bonds or debt instruments from governments or some other corporates which are big enough. But then as you graduate, you slowly, you have also to onboard smaller companies, or not necessarily smaller, other private sector companies and small and medium enterprises. I mean, it makes sense if we are running a market in a country like Rwanda, which is comprised of 90% plus of SMEs. They are the biggest employers. They are the biggest, actually they are the ones who have more growth than even the bigger companies, although the size is small, but the requirements are still the same. Good corporate governance, accountability, all right? Profitability. Those 3 things have to come. So that profitability comes with the viability of the business itself. Now, how the business is managed is also important. So now you go to tell someone who's just registering his company at RDB, starting to talk to them about listing their companies, they are looking at you as if you are crazy. What they are looking for is money just to go. But the money coming from the public has requirements and conditions. That is why actually things take time to bring more companies on board. There's that convincing part. There's buy-in. There's also understanding. There's skills development and gaps you have to do for the intermediaries or people, service providers, policymakers. You understand? Privatization is one of the key messages, key areas which normally typically provide an avenue for products that go to the markets. You understand? So if a public asset wants to be privatized, you don't necessarily have to sell it to one guy who has a briefcase. You just could sell it to the market. People are ready, they will be ready to buy it. I mean, everyone would love shares coming from a government company which can be run better with better governance and things like that. So those are things that happen. So now the creation of for example, the investment clinic we have started and the launch of our SME market segment at the exchange was created because of that, to cater for small and medium enterprises and other corporates which are yet to use the capital markets to raise their funding and come in the limelight. So, but even after creating that, you realize that, they still have a lot of cleaning up to do. The cleaning up is making sure that you are having the good corporate governance, you are clean enough, you are ready for the market. You are ready actually to be transparent. If you are dressed in your boxer, can you go in the street in your neighborhood? You don't.
You have to check.
You have to have a nice, yes, you have to get out when you are clean. So the companies by the same token, when we are talking to the small and medium enterprise through our clinic project or the other market structures we are trying to make sure that they are clean enough, because your closet, when you come into the public, you not be able to hide anymore. You understand? So you have to clean your closet first, then the visitors come into your house. You understand? Now you are no longer the only shareholder. But by them coming in, they are not coming to swallow you. Actually, they are coming because they are trusting you so that you can develop together. That's a key message for the supply side, for businesses that want to raise money, which is not an easy thing to do normally.
We don't have more minutes to run this show, but I cannot go without asking you two questions. One is about the antagonistic interest, or maybe conflicts of interest between the investors who are fearful and greedy to get the profit, and the brokers who are there to facilitate, but they are also in need of that profit as well. So how does someone, I think you're going to be brief in this, how does someone trust the broker that he's going really to help him to do the right decision?
The same way you trust your doctor, your banker, or your lawyer, it should be the same way you trust your own financial intermediary, because their job, what they do for a living, for them is to give professional advice on investments. Of course, they are motivated by making money. So if they give you good advice, you refer them to someone else. You will give them more money, for example. So that's one typical example. But the other trust that should be coming to them is that these people are not just what we call a commissionaire in Rwanda. You know, the commissionaire in town. You know, those guys who do that. There are some who are bad. There are those others who are not good. There are those who are good. But the professional intermediaries, the stockbrokers in the stock market normally, okay, they are regulated. That's number one. So every single movement they do in their accounts or their advice they give to investors. By the way, do you know, as a stock exchange, we don't license them, but we give them membership. Capital market gives them license as government. The stock exchange gives them membership so that they are able to practice. So practicing, you are bound by the law and the regulations. We do inspections, on-site and off-site, and then the KYC I was talking about earlier, for example, on behalf of investors. That is where you get to know your investor, their appetite, their age, all the things that influence the type of advice you give to them. If you advise them wrongfully on an instrument, or if you try to give them some bad advice, or you are mishandling their money, they can complain always. We have channels of communication and all that.
Mr. Sese Rwagumba, thank you very much for your time, and we also thank you for following and viewing this show, because without you, we don't have the Rwanda television, because we wouldn't be there. So we are pleased that you were there watching this show, and we pray hard so that you get more interest in the capital market business, so that tomorrow you become the client, you become the investor, because Rwagumba said everyone can be an investor so long as you can afford 2,000 Rwandan francs. This was the 360 show, and this is Ruzige Manuel Masantra for Rwanda Television.